I think some people have avoided this asset class. It's very risky. It is not appropriate for everyone. In fact, when you buy cryptocurrency on SoFi, we say this is a risky asset. It's unproven and you could lose all of your money. So with prices down at this level, we are seeing people take an opportunity to experiment with this type of investment and get to know the asset better.
SoFi's Anthony Noto there earlier on Bloomberg as the worlds of traditional finance and DeFi continue to collide. Bloomberg's Sonali Basak here to explain more what is happening. Sonali, take it away.
Emily, I think it's really important to listen to what Anthony Noto over at SoFi had to say about crypto, because they're a traditional financial technology firm that successfully acquired a bank, and that has helped it really rein in a lot of depositor money from clients, which then can potentially be used to do things like buy a little crypto in a downturn or invest elsewhere. The reality is options here to borrow, to buy assets, and to deposit your money for safekeeping at SoFi a higher interest rate than many other large banks. That is the choice that you're faced with at the end of the day. So that rolls us forward to soon after that interview we did with the SoFi CEO to comments that were made by the CEO of Binance. We know that Binance had considered making as much of $1 billion or more worth of acquisitions, and you have CZ now talking about the idea of buying a bank. There are people who hold certain types of local licenses, traditional banking, payment service providers, even banks, and we're looking at those things, he says. And we want to be the bridge between crypto and the traditional financial world, he says. So what does that really look like at the end of the day? When you think about, Binance getting more into traditional finance, can they do it successfully, similar to how we've seen fintechs like SoFi do it? They did it by buying a bank for less than $1 billion and getting that banking license. I want to show you here what it looks like in terms of multiples, though, because if you look at what it means to be a bank or buy a bank, even Coinbase, with that huge drawdown you've seen in the stock this year, you're still seeing them trade at a higher price to earnings than you are seeing the biggest banks in the United States, both regional and large investment banks, trade at. That is between 9 and 11 times earnings, and you're seeing Coinbase trade at a higher multiple. And when you look back again at what CZ had said, is that when traditional crypto firms do pair with finance firms, you do see the stock tend to jump of those finance firms. And he says by partnering with those companies, maybe taking a stake or buying outright, what you can get potentially is a higher multiple, both for Binance and that financial firm. So it will be interesting to see what kind of deals come out of Binance and others as we move along, not just through partnership like we've seen for the last year or so, but by pure money put into traditional financial firms, by firms that have gotten so large in the crypto space like Binance.